Hey, puppy trades! I wanted to do a video analysis update of the stock market. If that "Hey, puppy trades" sounded fake, I'm trying not to make too much noise. I do, you know, not live in my own mansion yet, so I don't want my roommates to hate me screaming "Hey, puppy trades." But I do mean it. Hey, puppy trades. What's up? What is good? I wanted to give you guys a little bit of a rundown of or just maybe a sample of my post trading day routine. So we're gonna talk about honestly just the things that um, you know I think are important. If we talk about this week, just a few small things. We had a holiday shortened trading week. We're not gonna have Friday trading. So generally speaking, 8 or 9 times out of 10, if I'm coming into a holiday week, what I'm expecting is that we're not going to have, a crazy, crazy move that week. That's kind of a common thing thrown around, and it's honestly something that I've observed to be true, just to be frank. We had one crazy move the Friday after Thanksgiving that was pretty notable in 2021, but generally speaking, I don't want to be betting on the big crazy move to happen during a holiday shortened trading week. On the contrary, what we can see in these weeks is that after these weeks, we have substantial moves. We have a big change in leadership. A whole bunch of new stocks emerge. And kind of, if we're in a bull, right? The bears are going to say, well, after this, because of what he's about to say, they were distributing. That's why we have the crash. If we're in a bull, which I believe that we are, especially if the S&P 500 is above SPY 374.77, that's a great downside level. We're getting far from the long-term true invalidation, but we're starting to get a lot of these kind of nesting looks confirmed. Oh my God, I just said nesting. People hate when I say nesting, but that is part of Elliott wave. Basically, if we look at QQQ, QQQ's done 1 2 1 2, wave 3 of wave 3. Nvidia a long time ago did 1 2 1 2, wave 3 of wave 3. Okay, I didn't mean to get into the SPY yet. What I was trying to say, if we're in a bull, if we're in a bull, um, during after a holiday shortened week, what I'm gonna expect is that this 3 day period, the MMs are using to kind of move a lot of money around, right? And so you're gonna say, puppy trades, how are they moving lots of money around? We don't have trading. It's like, well, there's these things called the dark pools, right? So they have kind of this extra dark pool day where they get more time to move money in their little weekend trading scheme. Anyway, that's kind of the thought process behind it. Certainly can't tell my broker. What we did see this week is something that we see a lot of times during bull markets, healthcare. And I'm not saying this is an indicator that we're in a bull market, but when we are in a bull market, which, like I said, I believe we are, that this is a large wave one and a wave two, a super wide invalidation is 348. A nice tight level right now is 376. Now, I think a more important level, just to be frank, would be some of these damn tech stocks. Because if we look at these tech stocks, like I said, QQQ's already done 1 2 1 2, wave 3 of wave 3. Nvidia did 1 2 1 2. It was definitely in wave 3 of wave 3. So QQQ above 259. Bears, I mean, I know that's kind of far. That's kind of the big or the most useful invalidation right now. Now, there is this one stock called Apple that I would be willing to throw the Bears a bone. Okay, so I'm going to throw the Bears a bone. Bears, if you're watching this, I'm about to give you a bone right now. And not the kind that my girlfriend gives. But anyway, this is a wave one. Um, this is what the bulls are going to say for Apple. Now, this is aggressive, and I make YouTube videos about the market. So this is kind of, this is kind of aggressive on a popular stock. But what the bulls are going to say is that Apple went 1 2, and it's in wave 3. I mean, even this isn't even really a bone for the Bears because that's far as hell. I mean, but still, what the there's a lot of invalidating to do in the long term. And this video wasn't really even, I didn't even plan to do this, but I know you guys like the short term stuff. If we're really, I mean, Apple's kind of invalidation. Bears have to prove it's not within a what we call an incomplete sequence. Okay, so I just said incomplete sequence. I have to explain what that is. So basically, if we look at this right now, there's kind of two ways to look at this. This is either a wave one and an ABC wave two, or it's a wave A and an ABC wave B. Either way, in Elliott wave theory, the minimum target for wave 3 or wave C is the length of wave 1 placed at the wave 2 low. And Apple hasn't reached that yet. Okay, so this, and this is why, this is just what I wanted to give you guys kind of my like garage of, the stuff that you guys like don't get to see. But yeah, no, this is what the Bulls are going to say. This is 1, 2, wave 3, or it's A, B, wave C. The Bears have invalidating to do on the long term to say Apple's not within a sequence to 177, at the least, even just within this cycle. If this was 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. The way that I like to find a wave 5 target is by taking the length of wave 1 and placing it at the wave 1 high. Now, the reason that I do that is because in Elliott wave, there are two principles that apply to this. One is that wave 4 retests the wave 1 high. Wave 5 is the length of wave 1 placed at the wave 4 low. So the length of wave 1 placed at the wave 4 low is kind of a shortcut, but I also think an important target. And that would take Apple up to 190. Now, I'm not going to go buy calls on Apple right now. This isn't even really the whole point of saying all of this was to say that in the long term, the Bears have work to do. Okay, that doesn't mean I'm getting cocky or anything. I'm more prepared for the downside than your guru bears, because your guru bears all said they were in out of the money puts and whatever. I've explained numerous times, and I just don't want to bore you guys to tears with the straddles and strangles that I have, and those include in the money options, put options that expire in several months, even years in some cases. I got more on the shopping list. I have a substantial allocation to covered call ETFs. Anyway, that was all to say in the long term, bears have some work to do in validating the downside bull thesis. Okay, now people are going to go nuts. Say, oh, this guy's too bullish. This is proof we're about to crash. What you have to understand is I'm more prepared for the crash than the people saying that. Okay, and I prove that on a daily basis. Okay, I can still show you where my downside exposure is and where my plan to accumulate until the stock market goes to hell, and what that would look like, what in the money puts I'd be buying, or I'd be buying against on METV, other market correlated stocks and ETFs. Most recently buying a straddle on 2024 that expires in 2024 on SH. Anyway, that's what I was trying to say. I know that shit. I can get off on a tangent explaining my entire risk management system. Okay, that's why it's kind of hard to make videos like that, right? And even with tweeting, like I can't explain everything there is to know about options and whatever the character limit is. The point is, this is a useful level right now. SPY above 374. The wide invalidation is 348. QQQ and Apple, right? Like Nvidia just exploded. AMD's the same thing. Like, like I think it's fair to say bears have work to do in the long term from an Elliott wave perspective. Now, that doesn't mean we can't crash tomorrow, okay? But I was I was just trying to give you guys kind of my like standard run through of the market. If we look at Tesla, you know, Um, I think bulls are gonna, if we're in the back of my head, I think we're looking at something like this. Um, this is a popular one. I'm not gonna sell Tesla if it goes below 163. Partly because of an ETF I have. But bulls are gonna say if I take the length of wave one, places this wave too low, we could see Tesla enter a wave three of wave three. Now I can't measure this out, unfortunately, live. But even kind of we've seen a lot of these one, two, wave three develop. NVIDIA one, two, wave three. What the bulls are going to say, if you just want the truth, is that Tesla's about to do what NVIDIA did. One, two, wave three. Um, that's just in the back of my head. I own a lot of something called something called Tesla, which I'll get into soon. Um, but bulls are going to say that kind of this growth thing has begun, right? BITO. When you look at Bitcoin, what are the bulls going to say? They're going to say that's wave one, that's wave two. Bitcoin's going to enter wave three on the small degree and wave three on the big degree. We look at Ethereum. Bulls are going to say, why aren't some of these about to follow NVIDIA? Why aren't some of these big tech, large cap growth, related names that usually move with, stocks like Facebook and NVIDIA and Netflix and, other stocks that have done quite well. I don't mean to just talk about tech in this video. Let's talk about Pfizer. We've seen a lot of option activity on Pfizer. Recently, it was on this screen right here, which is from iVolatility. So I think in the past like 2 or 3 weeks, Pfizer was on the screen. I really love the screen. Interesting to see Disney on the screen. GameStop and Chewy, also pretty interesting to see these on the screen as well. Walmart, we'll see which of these we can get into. But Pfizer was on this screen recently. I think Pfizer is about to do something that's pretty similar to what it did when I took advantage of it in 2021. We had a very similar reading where I took advantage of this exact same screener. And this is screening for options with 0% implied volatility rank and percentile that are in the top in the top 200 volume and open interest. So the lowest IV rank and percentile names in the top 200 volume and open interest for the market. If we look at Pfizer, I think this is a wave one and a wave two from this 2020 low. So this is 1, 2, 3, 4, 5 waves up. An ABC correction at the 61.8 to 78.6% fib. 35 is a nice level. I think a wider, more useful invalidation is the small wave too low of 33.36, but 35.12 is that standard 78.6% retracement. I think we're going to see Pfizer begin wave three of wave three from this level. 35 is nice. 33.36 is a little further. If we look at Pfizer from a fundamental perspective, we're seeing it right now at that 4% dividend yield. It's grown its dividend for a very long time, since it looks like it's grown its dividend since the late 80s. It has a 23% payout ratio. Generally for payout ratios, 20% is kind of like that standard sustainable to grow number. That's just an extremely general rule of thumb. Obviously, it varies industry by industry. 23% is nice. That Pfizer is going to continue this dividend growth streak, even increasing it in this most recent quarter. So that's all to say. This could be an interesting, maybe like the success we've seen of Starbucks, Johnson and Johnson, Coca-Cola, some of those kind of classic dividend growth. Oh man, those were big winners to compound. JP Morgan, stocks that aren't even done. That could potentially be Pfizer above 35, 33.3 something, little wider. Johnson & Johnson looks like it's leading kind of healthcare into this wave 3 right now. Um, it looks like this is a wave 1 subdivided into 1, 2, 3, 4, 5 waves, an ABC correction between the 50 to 60 or near the 50% retracement. I took the length of wave A, placed it at the wave B high, and showed that was where wave C ended. I don't have that depicted anymore, but I think this is a large wave 3 that we're seeing begin. Now, it's up 4%. I'm not saying I'm going to go buy a bunch of Johnson & Johnson calls tomorrow, but as a leading kind of indicator for kind of this dividend growth, especially the healthcare sector, the length of wave 1 placed at the wave 2 lows says 138's pretty wide, 147's a little tighter, a lot more useful. The length of wave 1 placed at the wave 2 low can take Johnson & Johnson all the way up to 227. Call it 220. Yield Max announced their distributions recently. So OARK has a 51% dividend. That would give it a 37% annual yield based on its previous a 37% dividend yield based on its previous distributions. Tesla is paying out 82%, which is still very high. So we I posted towards the end of the month that a lot of tech and growth ETFs were at 0% implied volatility ranking percentile. So that's one thing about these ETFs is that when there's lower implied volatility in relatively speaking, IV rank and IV percentile, when they're low, the option premiums are going to be lower, the income is going to be less, but that's part of holding all covered call ETFs like JEPI, XYLD, RYLD. We have an ex-dividend date tomorrow. I'm going to take advantage of that. Buying, I'm going to buy this tomorrow. So I design kind of lots or kind of blends of, stocks and ETFs that I like. So tomorrow I've designed a $283 lot. So basically I just design kind of a small lot and then I can replicate it and scale it as much as I'd like. So tomorrow a $283 lot that I'm planning on buying, barring a huge gap up, is one share of SCHD, the Charles Schwab dividend, dividend superstar ETF for $72 SCHD, $69 to SPHB, which is the high dividend, the high beta, not the high dividend, the opposite of the high dividend. SPHB is the high dividend stocks in the S&P that can be bought for $69. So I'm planning on buying one of SCHD, one of SPHB, and then the rest of the lot consists of 2 shares of RYLD, the Russell 2000 covered call ETF, 2 shares of OARK, and 2 shares of Tesla, and 1 share of XYLD. That's the S&P 500 covered call ETF. So I'm going to buy 1 share of XYLD, 2 shares of Tesla, 2 shares of OARK, 2 shares of RYLD, 1 share of SPHB, and 1 share of SCHD. That's going to be a $283 lot. I'm going to buy that tomorrow. I can scale that infinitely if I want to buy, if I want to invest, $2,830, I would buy 10 of those lots. If I want to invest, 20,000, or you get the idea. It's infinitely, that's kind of a lot or a group of stocks and ETFs that I'm planning on buying. So I just want to show OARK and Tesla are in that for tomorrow, barring a huge gap up on the jobs report. I'm going to buy that. I want to talk about silver recently. I know, talking about silver's the guru thing to do right now. If we look at silver on the long term, my view is that something, substantial could happen, that this is a large wave 1 and wave 2, a massive wave 3 that takes SLV all the way to the median of this pitchfork could occur. So that's a very long-term idea. But in the short term on this cycle, bulls are going to say this is a wave 1 and a wave 2. We can see a wave 3 develop where the minimum target is 33. A wider target would be the 161.8% extension of wave one, which is 38. In the small degrees, bulls are going to say even that this is a wave one and a wave two and a wave three is developed. So I believe the 161.8% extension of this small wave one and wave two takes SLV above this high. If we look at AGI, we're seeing kind of leading indicators in this sector where the metals, AGI is already above that, kind of late 2020 high. This is a Alamos Gold. It could be a leading indicator for the sector that yes, it is in a wave three eventually going to the median of this Andrews Pitchfork. So I think that's kind of a leading indicator. I think one that's kind of lagged that looks like a, kind of showing how it's the still early idea is Newmont Gold in this mining sector. If we look at this large wave one is 1, 2, 3, 4, 5 waves, an ABC correction at the 78.6% retracement, and then bulls are going to say this is a wave one and a wave two and a wave three of wave threes developed. So this is not above the wave one high of 60 yet. Bulls are going to say that's kind of, we're going to see Newmont Gold follow, and once it does that, gets above 60, this could be, confirmation of a large wave three in the big picture for this stock. And obviously if Newmont Gold is going to, the 80s, we're going to see, a whole host of stocks with it. So let's look at some of these option screeners. I like the long straddle screener. I've talked about it a lot, so we can look at this. Let's see. We have Plug Power on the screener. It's a growth stock. It's continued to get hit. So this is gone below this May 2022 low. So that means it did not form a wave one and a wave two from this low. So in the big picture, that high was 75.49. What bulls are going to look for a lot of these clean energy stocks is that they, especially the small cap ones, are ending wave twos past the 78.6% retracement. So the critics are going to say that, I'm just moving this wave two lower, which, to be fair, we have gone below the 78.6% retracement. I like to manage growth, downside risk with straddles on the metaverse, ETF, METV, covered call allocation, particularly to growth, and small caps like RYLD, OARK, in a way QYLD, the Nasdaq covered call ETF, for covered calls on tech. But we're seeing, some of these wave twos going past the 78.6% retracement. Plug Power is an example of this in this sector. So this looks pretty ugly because it's on the monthly chart. On the weekly chart was how I originally had these numbers. That this was a wave one subdivided into 1, 2, 3, 4, 5 waves. This is an ABC correction, and bulls are going to look for this wave C to end past the 78.6% retracement and eventually get back above it and head towards, as crazy as it sounds, a wave three, which would take Plug to an all-time high. So there's no useful downside level right now. This small degree wave one high is 6.05. We have broken my original stop on this, but this small wave one high of 6.05 isn't too bad. NEO's recently been on this sector. It's kind of a similar idea where we've gone below the 78.6% retracement. There's not really a low to trade against. 5.65 is that kind of small degree wave one high, and I've seen it on this screener as well. I think for both Plug and Neo, there are other kind of sister stocks that are giving more downside levels. What bulls are going to say is that this was that 1, 2, 3, 4, 5 waves impulse. It catches the eye of retail, and then the wave two is where it goes past the 78.6% retracement. Everyone says bubble town, and wave 3 begins. So there's not a wave 2 low to trade against. This wave 1 high, 5.65, is a nice risk reward level for now. But realistically, I'm using for my Chinese EV stocks and my clean energy stocks, position size is the primary kind of gauge. Alibaba in the Chinese sector may give some hope for, I'm not saying that Neo like needs hope or anything, but as far as downside levels go, this looks like a little more useful. A large wave 1 subdivided into one, two, three, four, 5 waves. In an ABC correction, wave 2 for Alibaba. Bulls are going to say this is a small degree of wave 1 and wave 2. And we can see a big wave 3 of wave 3 develop. So a very tight level is 79.48. That's because I'm interested in Alibaba in the long term. So I bought Alibaba at 165, and I'm still holding it. But I think this is a wave 1 and a wave 2. And I'm looking for this, to be a potential, next Amazon setup. But that's what I'm holding it for. So I don't think it's going to be easy. If we look at the Hong Seng, I haven't looked at my Hong Seng chart in a little bit. It looks not like too much hasn't changed. But think this is a large wave 1 subdivided into one, two, three, four, 5 waves. In an ABC correction, wave 2. Some people say that wave 4 absolutely cannot break the wave 1 high. So this could be an expanding diagonal for the Hong Seng. It could be that wave 1 and wave 2 are right here on the smaller degree. This is wave 3, wave 4, and wave 5. I think that it's clearly 5 waves. And in the big picture, I think it's part of an even larger degree cycle where this is a wave 1 and a wave 2. This is another wave 1 and another ABC wave 2. The ends of the 78.6% retracement. All that's to say, I think that Alibaba and the Hong Seng, for me, kind of give evidence that China's and Chinese growth is not going to be easy. But I'm looking for it to be worth it in this sector. Net ease, large wave 1 and wave 2, similar to Alibaba and the Hong Seng, possibly another wave 1 and wave 2 at the 78.6% retracement. And we can see NetEase and Alibaba, begin a wave 3 of wave 3 together, almost certainly coinciding with, the Hong Seng and by extension Neo. So I'm still holding Alibaba, XPEV, Lee, and even Huya. Let's look at some other names on these screeners. So I like the long straddle screener. Let's see. Let's look at some of these financials. I know Wells Fargo has been in the news recently. If we look at Wells Fargo, I think in the big picture it looks something like this, where we have a large wave 1. Let me adjust these a little bit. So for Wells Fargo, I'm looking for, this is actually an interesting setup right here because of the 78.6% retracement. But I'm looking for something like this in the long term for Wells Fargo. I don't think it's a global financial crisis. I have a straddle on AG&C, and I also have a straddle on SH that I've gone over recently, an ETF that inverses the S&P 500, and those both don't expire for several months. So I've gone into those recently, but that would give me kind of indirect downside exposure to financials. I think this is a large wave 1 for Wells Fargo, subdivided into 1, 2, 3, 4, 5 waves. An ABC correction, I think this is another wave 1 and another wave 2 at the 61.8% retracement. The length of wave 1 places the wave 2 low. Can take Wells Fargo on a wave 3 up into the 70s. I think 29 is a very useful stop for a name like that. In the financials, that 78.6% retracement. If we look at other financials, though, we did have some leaders, and I can't tell my broker there are leaders in financials, but JP Morgan, gave a little bit of evidence for this sector that, hey, don't, count out the banks. JP Morgan's going to say that's a retail bear trap. Everyone's an expert in contagion now, just like they were an expert in virus contagion. Oh boy. Anyway, that's the last political thing for this video. JP Morgan's going to say, don't shout at the devil until you've been to hell. This isn't the global financial crisis 2.0. If JP Morgan's above 101, the length of wave 1 places the wave too low, can take it all the way up into the 190s, the 200s, and even beyond in the long term.